Hello and welcome to this Fireside chat. I'm Govindraj Ethiraj. There are over 1 billion mobile phone subscribers in India today. These billion mobile phone subscribers, many of whom have broadband internet access and therefore consuming content as well as enabling commerce, are generating several new forces, particularly driving business, startups, the startup ecosystem and the overall economy. So what are these new forces and how will they play out? What are these new digital scripts that will play in 2021 and beyond? To discuss this, I'm joined by Haresh Chawla, partner of True North, former CEO of TV18, who has been writing extensively on this subject and has presented several new thoughts, and most of them quite encouraging to where India could be headed in this new digital economy. Haresh, thank you very much for joining us.
Hi, Govind.
So,
good to see you again.
Yeah. Likewise. So tell us, if you were to now take a step back and look at India as an economy, we've obviously made huge strides when it comes to mobile penetration and internet penetration and broadband distribution. What is this? What has this created, and what is this likely to lead to, particularly in the next year or so?
Yeah, so Govind, I know one way to look at India is not look at it today. Imagine you were 5 years out ahead and you looked back. I think this year would be the year of massive shifts in the economy. I think clearly there is the confluence of multiple trends that have come, and somehow got timed at the same time. We have had, massive mobile phone penetration. We have had very low data cost. We've had COVID that forced people almost to adopt a digital lifestyle. And this is across layers of the economy. So remember, if you look at India, it's not one economy. You have to divide it into a few layers, and each of those layers behave in a different manner. You put all these three things together, and then you see the transformation that's happening across the landscape. There are other international trends also coming in, that the whole world is digitizing at the same time. You'll see that there is a massive demand for talent that understand digital, for programming talent, for coding talent all over the Western world, as companies there have been forced to digitize. There is the whole India, America, China, let's say, axis and alignments and differences and pushes and pulls that are going to take place. So we are at this moment in time that when we look back, you will find that everything would have transformed, and a new bunch of winners and losers will emerge from this whole shift that's happening today. Clearly, one of the biggest things that's happened is that India, which is, we always, I always look at India as two-layer economy as far as the internet economy goes, that there are large bunch of internet viewers who are actually using the smartphone only as a consumption device. They consume content, they watch YouTube videos, they watch movies, they consume OTT. They don't actually transact on the internet, and that's been a large chunk, and somehow all the numbers so far over the last many years have assumed that these people are transacting on the internet. They have not been. And the other, we've had a smaller base between 70 to 80 million people who frequently transact on the internet. All the money that went into the Indian digital system economy and the billions of dollars money that has flown in has actually gone in to really get habit change and adoption by the 70-80 million people. But with what events of the last 6 months, a fundamental shift has happened. The large chunk of the internet viewers who are the viewers have now started transacting. So at a fundamental level, I think India's economy, internet economy, is no longer a push-based economy. It's becoming a pull-based economy. And in several cases, the consumer is far ahead of several of the companies. Nobody expected such demand offtake. Nobody expected such habit change in the large number of internet viewers who already had a phone, had a data connection at a low price, but did not actually have the faith and trust to transact on the internet, which has changed. So my sense is that this whole, we are going to see a cataclysmic change in terms of the way the companies' P&Ls will look now, the way micropayments is kicking in, how consumers are willingness to pay. So all those shifts are going to be, when we look back, this will be the defining year for all of these shifts.
Right. So let's talk about the numbers now. You talked about the consuming economy, which I'm assuming is hundreds of millions of, the viewing economy, which is hundreds of millions of users, and the consuming economy, which is still under 100 million users. So how much do you see that changing now as a result of COVID, number one? Number two, how much of it will be sustainable? For instance, let's say if we go back to life as normal, do you see the number of consumers remaining at the same level and therefore a permanent habit change? And or will they go back to being viewers which they were earlier?
No, my sense is I think I think we've grown by threefold in the number of consumers, and we may fall back to the viewers going back to the old habits, but we have seen at least a doubling of the ecosystem, doubling in terms of the transacting users, and also a multiple, let's say you would have to apply on the number of things they use the internet for now. See, they were never using it. Now they're transacting on it. And the transactions are not only buying grocery, buying ration. You will find that as the entrepreneurs now create new services for them, they will start paying for different services, and they will no longer shy away. This whole idea that you had to pump them with discounts, had to make sure they will not be willing, you could not charge them delivery charges. All of those shifts have already happened in the consumer's mindset that this is a more efficient, safer medium for me to use. My choices have multiplied. I have more control over the transaction, and it is not so difficult to use. I can trust it. My money won't get lost. I think remember that the whole UPI adoption also has played a huge role in that. The new payment mechanisms that have come in again played a huge, that certainty of dealing on the internet, which was missing earlier, has come in. And I think what you will find that entrepreneurs now will really focus on building the vernacular India. You need a Tamil internet in India, you need a Telugu internet in India, you need a Malayalam internet, you need a Gujarati internet. I think those different forms of the internet will also now get impetus, because till now it wasn't profitable to do many of those things. But now it's clear that those markets exist, those consumers are willing to pay, right. Their consumers are willing to engage as well.
Right. So for those who look at India from outside, the big trends that people were familiar with was, of course, the Flipkart, and then Walmart coming in, Amazon stepping up investments, a few fairly significant players at one time in the e-commerce space falling by the wayside. And now the big brothers, in a manner of speaking, coming in, which is Jio, the big investments into Jio platforms, Jio in turn getting into commerce and e-commerce. So how is all this adding up or not adding up in your view?
I think clearly, everybody is looking at China, the formation of the WeChat, the Alibaba, and saying that there is this whole consolidation and large flywheels of the internet to be built. And clearly, some of the strategy is determined by what has played out in China. Remember, India is more akin to China than the US. We are a mobile first economy. US is not. Therefore, our ecosystem is probably seen from outsiders as an economy that will follow in the footsteps of how China progressed digitally. So some of those clearly will play out. You will find that Walmart, Amazon, Google, Facebook, Jio, Tata's, and maybe a couple of other players, because remember the Chinese are currently not expanding their footprint in India because of reasons we all understand, and therefore they may not play such a big role in shaping the ecosystem in India. But clearly these companies are in the midst of forming their networks. They realize that the depth of the market has suddenly expanded with the cheap availability of data, that the incumbents in the market, which are traditional firms, are really weak, because they are weak not because of anything else, but mostly because they cannot hire the talent that can get them a digital mindset and get them digital tools. So that's one thing. They're seeing almost a fight that it is for them to lose. So therefore, they are making these inroads. You've already seen COVID hit a lot of traditional firms which had weak balance sheets, which had weak management. And clearly those market spaces are opening up for these companies. So my sense is that these ecosystems will develop, but between regulation, between the way our payments or public digital infrastructure is coming into place in India, which doesn't exist in China or the US, the UPI, the Aadhaar, they will necessarily be weaker versions of the dominant systems that you see in China. So first of all, you will have more systems here. They will probably not as dominant as we're seeing them to be in China.
So we've seen a lot of money, as we've just spoken about, being raised by Jio and Jio platforms, and also there seems to be a race to creating a super app. into which other organizations, including in the retail and brand space, are plunging into. So, what is this race for a super app, Haresh, and how is it likely to play out?
Yeah, so see what's happened with Jio's fundraising and also the way they've come on top of the mobile race is that it sent a shockwave through India's conglomerates and India's incumbent traditional businesses. So that there is this race which they have been sleeping on, and Reliance has been working for years on, and has somehow come and put it all together over the last 6 months actually. And that till now everybody thought they'll see when and if it happens, but it's clearly it's coming together today. And that shockwave has resulted in these companies. I'm sure every board meeting in these companies, they are wringing their hands as to how to develop a digital strategy for their business. See, I think people don't, I think slowly people will understand it that you may sell your product through Amazon or through Flipkart or through Snapdeal or through any other mechanism, but you're losing touch with the customer because you're handing over your business to these platforms. So this idea that these large companies they feel excited that we now have moved up our online sales from 5% to 10%. The way to look at it is that you've lost contact with those 10% customers because now they are Amazon customers or Swiggy's customers or Zomato's customers. You see that in the restaurant space as well. You see how these platforms are coming and taking away customers. So you're not becoming digitally savvy, you're becoming digitally blind. And I think that slowly realization is coming in, and therefore you find the larger conglomerate saying, okay, can I push, like Tata's, can I build a group-wide strategy and build one app where we can service all our millions of customers and put them together. So it's a very, noble goal to have. At worst, it will make sure that all their companies become digitally savvy and become digital native. And at best, a super app strategy will work. Of course, they don't have, as I keep saying, a high frequency use case. So that is something they're searching for. They've applied for the new umbrella entity license. So whereas you see Jio, Amazon, Walmart all coming together and trying to create this kind of ecosystem that will become a self-propagating ecosystem, that you run a bunch of services for consumers, you add more services, consumers use more services, and they get stickier and stickier with you as a platform. So I think there is a race that's on. We will have to see how this plays out over the next few years. Clearly, there are only a few players who've managed to do this well in the world. All of them are in China. It's not happened anywhere else actually. But it's a noble goal for any company to have.
Right. So let's look at the India-China comparison again. Now, if you look at Jio is obviously an energy company that got into retail and then into telecom. I mean, not necessarily in that order, but they are a telecom infrastructure player. They own mobile phone subscribers and now getting into commerce. You don't have similar examples in China because China, you don't have a Jio equivalent. So is Jio in that sense, is it a threat or is it an opportunity to other players? And particularly when you look for deals, for instance, or you look at investments?
So my sense is Jio is a threat to several of these players because I think this unique combination of, remember they have broadband data as well. They've got wired line, they have wireless, and they are not just dabbling in commerce and content. They have the vertical stack available to them. They actually run stores. They actually run warehouses. So therefore, it's fundamentally a different concept than a player just adding on, let's say, e-commerce to their content business, or a player just adding on content to their telecom business. So I think in that sense, Jio's strategy seems to be very different from what's played out elsewhere. That this is not some Virgin Mobile or some company just adding a few little bits of content and commerce. These are full stack plays, standalone independent companies on their own. Now the question is how well do they integrate and how well do customers accept and which layer of the market do they play at. So I think remember that again, we have to continuously see India from a lens of multiple layers, and each of these layers is large enough to build multi-billion-dollar companies.
Right. So, COVID was a period which was decimating companies, and Jio platforms was raising money all through this, all through these months, over $20 billion. So, break it down for us. Why would someone invest more than $20 billion in a company in India at this time, and what are they hoping to gain?
See, I think the signals were quite clear that we have such a high friction, high transaction cost economy that digitization of India was going to generate wealth and generate value. The question was when and how. It was not if. Clearly, the bet was that, and Jio has proven it with the execution across all the three verticals, that if they do a great integration job and bring their consumer base on the telco side, together with their base on the commerce side and the content side, and also probably build a good payment infrastructure, much like Alipay has or WePay has, WeChat Pay has, there is a huge value creation opportunity there. So my sense is the signals were quite clear. You know, today you'll find that the friction in the market is so high that the digital firms are really much better off than the incumbents, and COVID has made this fight even tougher for the incumbents actually. It's going to be very difficult, you know, no matter how much market share you have today, the digital companies are going to gain market share and hurt your business.
Give us an illustration or a couple of illustrations.
I mean, look at any business or look at what's happening in the education or coaching class business. See what happened. You know, massive market, thousands of students going to coaching classes, Kota as a city completely surviving on JEE admissions and coaching, all slowly getting evaporated. It's like the money that parents want to spend on education continues to stay high or even become higher as we see the new opportunities. I mean, I think India will generate many millions of coders as the demand kicks in. I think we are seeing it'll take some time for that to happen. But all these companies, TCS, Infosys, all these are building digital infrastructure for global companies, and that demand is going to shoot. You'll see that how education companies or just edtech companies is wiping out these other forms of coaching.
Right. So So, you know, we're talking about the new digital script. So I think what you've outlined now is that there is a very powerful foundation of subscribers. There is a new foundation, in a manner of speaking, of consumers who have either doubled or tripled only in the last 7 or 8 months. And there are entrepreneurs who are creating new services and maybe different from other countries and bringing all of this together. So tell us now about what are the kind of winners you see and maybe even losers, and the kind of winners you or your firm would put money behind.
And also, I'd like to add that there is a willingness to pay. Remember that, you know, we were pushing hard against, internet companies were pushing hard against consumers, and suddenly that when you push against a hard big rock and suddenly the rock starts rolling, that's what has happened. So my sense is there are 3-4 trends. One is that I think digitizing layers around, there are many opportunities. There are firms that are helping incumbents digitize, you know, who are putting a layer of digital services in the market and providing services, security services, setting up infrastructure for these companies, incumbents, even let's say setting up online stores for these companies. You know, I think a very different kind of Shopify will emerge from India, which is mobile first, very light touch, very easy to use, will emerge from India. So those are the kind of one set of services that one has to look at, which are really helping Indian companies do well. The second part I see is that Indian SaaS businesses will now get acceptance abroad more easily. No longer are it's such a high friction to do a Zoom call with a customer in US or Europe and get over and sign them on, especially if your product is a unique product and is because remember our creation costs are lower than the West. So to some degree we'll see a lot of Indian SaaS companies really do well, and we are seeing some evidence of that come in. I mean, if you look at some of the companies that have started up in the virtual conference space, there are two or three Indian companies that are doing extremely well and have suddenly seen a takeoff in their revenues over the last 6 months. Education technology we talked about, EdTech is a big space. Fintech, I think again you'll see many new models emerge. There is the whole banking stack is ready for disruption. It's been ready for disruption for a while, but I think this is the time when big amount of capital will flow into that sector. The world is flush with funds. There is clear arbitrage available to do business in India on the financial sector front. And while the Indian private sector banks will still do well because they're eating away the public sector banks, there is a whole digital layer that will come between the consumer and these banks. So that's again a sector. There will be new forms of lending coming, new form of micro payments. So I see some of these trends kicking in the fintech sector. I think these are the 3-4 kind of big trends that one sees. Indian SaaS companies serving Indian consumers and Indian companies. Indian SaaS companies serving global customers, also in newer areas, in cloud, in security, in mobile, and then the financial services, which is clearly headed for a complete changeover over the next few years.
Right, and I'll come to the investment opportunities that you see within them and who's maybe looking even stronger. But let's focus on fintech for a moment. I mean, India is obviously a large country in terms of consumption. There is now the number of bank accounts have gone up significantly in the last 6 to 7 years, and thanks to the government's own financial inclusion efforts, and combined with, of course, the fact that people are able to use mobile to do banking. So. At one level, I would feel as a consumer that everything I want is already there. In terms of accessibility, in terms of, let's say, the ability to get a loan and so on. Though equally, on the other hand, it sometimes appears that because of traditional structures, because of regulation, that banking is not as easy as the technology walas or the technology folks would like us to believe, or would like it to evolve. Your thoughts?
Yeah. So clearly, there will be a tussle that will go on, and remember that the entire banking industry is on one side. They are protected by RBI. They keep creating fears about how fintech companies are not well governed, or they can create systemic issues. So that's one push and pull that will continue. We are seeing that in e-commerce as well, between foreign companies and domestic companies. So even while these tussles go on, I think it's quite clear that the RBI is allowing technology companies to keep making steady progress. So between the sandboxes, between the easing of regulations, between allowing new umbrella entities, you will see steady progress. I know that it's frustrating to be on the fintech side because all of these things are taking a lot of time, but equally it's not as if they are not happening. So I am very positive about the shifts that are taking place, and my sense is they will accelerate it. See, even though you're a consumer and bank, and remember, money is already digital for decades now. So there is no reason why you shouldn't be using a HDFC or Axis or ICICI bank account instead of Google Pay. But you end up using Google Pay because the experience on the banking side is so clunky. And I think as these new digital natives and new digital savvy customers are coming, they will soon realize that they don't want. Why should I go through a clunky experience? You have my bank account. Keep the bank account, but I will transact using a service that's much easier to use, that keeps record of my transactions, that gives me receipts that I can forward and do whatever else I want with. Try the fundamental, and I'm not saying Google Pay is a great experience, by the way. It's one of the more clunkier experiences on the digital front, actually. It's bad. But even that bad experience is much better off with what you get from your bank in India. And this is fundamentally coming to talent. So remember that India does not have enough digital talent available to supply to everybody. So very simply, some companies will fail at doing a good job simply because they don't have the talent at all.
Right, and that's a very important point that you mentioned. So you talked about Google Pay, and WhatsApp has also launched Pay finally after much waiting and so on, which is Facebook. So now the question is, will these giants run away with the market because they also have the talent, maybe sitting in Silicon Valley, maybe some of them sitting here, and would maybe outbid anyone else when it comes to talent and maybe ideas as well? Or is there other fintech opportunity still available in a market like India, and of what kind?
See, I think one side is payments, and my sense you've already seen UPI, which is actually not a regulatory authority. It's a consortium run by banks, put these market share limits. So you're seeing, my sense is there is a global pushback from governments and regulators to not allow excessive dominance by these big tech players. So my sense is some of that will play out in India. There is no question. I think whether it should be done by setting up market share caps, or should there be some other mechanism that one needs to come in? That I think we will evolve. Regulation in India evolves in a very start-stop manner. We over-regulate, and then regulation falls behind. So we'll see some of that in any case play out. But the direction is quite clear. As far as payments go, yes. See, remember with UPI payment, there is no money to be made from the payment itself or the transaction itself. The fact is that all these companies are going to build other services where they earn the money from and use payment as lubricant only, not as a monetizing phenomena, because UPI itself is a public infrastructure available. The cost is very low. Even though I am assuming that banks will start charging at some point. Remember, this is the way they will make money, because they will eventually charge for UPI transactions.
Right.
So payment is one side. But if you go back to the other aspects of fintech, which is lending, which is pay later, all these services are big markets where data, algorithms, consumer connect, credit rating will all combine to allow people to access loans and access what they need very quickly, which banks are not able to match up actually.
Yeah, exactly. And therefore you see a lot of opportunities for startups in this space on the lending side and the lending data, the
lending side, and also even the plumbing. See, even connecting to banks is a big business opportunity in India, because remember, bank accounts will still not get deregulated quickly. So your bank account, your counterparty will always be a bank account, which will be lying in one of the banks. But the whole pipe business to set up and allow this infrastructure to be used, the API, that's another huge opportunity as well.
Right. Okay. And I'm going to come back to the digital scripts and your picks for the year ahead. Before that, you used to be CEO of the Viacom joint venture in India, so you understand the entertainment space. So let's talk about the viewers for a second as well. And we've talked about consumers so far. What are the opportunities that you see there, particularly given the way OTT has grown so rapidly in India?
Yeah. So my sense is that unlike the West, where your cable bill was so expensive that Netflix came and substituted and cut the cord, we won't see that happening. However, consumption time in India will shift away from television. The television will stay on. It hardly costs any money to keep your television set and your access to 300-400 channels running. But the content is no longer as relevant. It's not your personalized viewing experience. And therefore, these OTT platforms have suddenly seen a huge offtake in the consumption time that's being spent on them. Monetization will become easier, but it won't be like you won't have a situation where there are only one or two platforms. Again, if you divide India into multiple layers and multiple languages, each of these platforms will find some of their own niches to play in, and which will eventually turn out much bigger. So you will find that you can already see Amazon Prime working on Telugu movies. You will find Balaji Films running a completely different genre of content. So I think the market is vibrant here. TV will slowly lose in terms of how much time people spend on it, except for sports. Everything else is going to see a downward trend. So again, a ripe market, but not a winner takes all market. I think these companies have to compete on price. They'll have to compete on content. Because remember, one more thing that happens in India, that we have seen such social and economic compression is what I call it over the last 20 years. We have almost played out in 20 years what most countries play out in 50 years. That watching library content is no longer exciting for Indians. You don't want to see a movie that was made 10 years ago. And if you leave the exceptions out, the whole context has shifted. Even soaps or even any other shows. So you're finding that fresh content will be a driver, and therefore no one player has all the fresh content available. So the fight is much more even in India versus what we saw in the West, that if Netflix went to all these majors and picked up their library content and put it out, it managed to get consumers. So it's a slightly different
but that's a very important insight, Haresh, about library content not necessarily having the edge or giving you the edge in India, and therefore fresh content driving it. So again, in the OTT entertainment consumption space, do you see opportunities, entrepreneurial efforts or initiatives?
Yeah, so clearly my sense is that it's a question of amount of capital available as well. See, any of these OTT spaces will be a function of what's the audience size you have available with you. So I don't think the entrepreneurs will probably be, opportunity will be on the supply side, where you create content for these platforms. So I don't know whether the market has been, has got reasonable number of players now. There is Sony already there, there is Viacom there is Amazon Prime, there is Netflix, there is Hotstar, there is Balaji. So my sense is the number of platforms are enough now. I think the content is where I think there is a supply gap, both in the kind of content and the language of the content. And therefore, a lot of entrepreneurial opportunity will emerge on the content supply side.
Right. Okay, so let's come back to the theme that we started with, the new digital scripts India will see. So you did talk about some areas, including fintech, where you see a lot of opportunities. So I think the question that I'm sure many people want to ask you as well is really, where would you put your money on in the next year or two, and how would you choose what you would choose?
So my sense is financial services, fintech is one area. I think healthcare and the models that are emerging there, where again, I think we've seen customers habit shift. They are willing to take healthcare advice on online video, engage online. So I think there is a whole a bunch of startups that opportunities that will emerge on digitizing the healthcare and telemedicine experience. That's another space that's going to do well. I also believe there are even in the logistics space, I think the market is now ready. See, a lot of chaos has now been, COVID has forced a bit of order on the market. So a light asset models which connect on the logistics front is another opportunity, where you don't necessarily have to own the infrastructure or the trucks or the vehicles, and you build a soft layer on top of them. So that's another space I look at. Besides that, there is a lot of work that's going on deep tech side, where companies are, if you look at what companies like BrowserStack have done or Postman have done, these companies that are building a combination of services for other digital platforms across the globe. So that's another area that one has to look at. A lot of work is going on EVs as well. I think we will see EV or battery operated cycles. I think that's another place that we will see some pickup there. The demand is massive in India, and a bunch of new models will emerge on that front as well, on mobility.
Right. Okay. So this sounds quite interesting, and I'm glad you've brought in electric, because that's something that I'm sure maybe we've anticipated a question as well. So now comes the question of capital, actual investment, and exits. So one thing that's changed, and as you alluded to a little earlier as well, is the China factor. There was a lot of Chinese money in the Indian system, and because of let's say geopolitical reasons, is unlikely to come in at the same level for sure, and maybe even start exiting. So what does this mean for when it comes to funding startups, when it comes to getting good exits and so on?
So my sense is that, you know, these two things luckily for us happened at the same time. That on one side, China, this conflict has cut down the China funding into India, into the internet space, and probably even globally you'll see a pushback on Chinese internet investments. But equally on the other side, we've seen this flush of liquidity come in, and India emerged as a pocket of growth in the world. So you find that a lot of money that will come into, and India, remember, has to get a very little flow for it to be a massive, let's say, shift in the amount of money we get every year. So a tiny shift in global flows can make a massive impact to our fortunes, and that's what we are seeing now. So there is enough dry powder across the world. There are new funds continuously looking for deals in India. They are seeing, I think I may be saying this too early, but my sense is between the constantly, I mean, when we go out and eat street food in India, what it does to our immune systems has probably helped us that COVID is not, affecting that hard. I mean, really, I mean, if you eat a pani puri in the street, I'm sure you're getting your ton load of viruses of all kinds. So my sense is that I think our economy is going to return faster to normal than we all expected, and we're seeing that playing out. COVID has also ensured that the traditional firm, the digital, as we talked about, the digital shift has played out instantly. So I think the wall of capital that's available to Indian businesses is massive now. I don't think there is and we saw Jio pick up money during this time. So clearly, Europe is not a place to invest. China is not a place you can go. India is a place where the headroom for growth is massive on the digital front. So I see governance is not a problem. Regulations are difficult, but they are not completely uncertain. It's not like China at all. So I think all these factors, when you put together, it's a fantastic place for money to flow into.
Yeah, I mean, and you mentioned regulation in China, and I'm sure people who are watching this in the region would want to know. I mean, can an ant IPO kind of situation happen in India?
Not likely. I don't think, I think India is a difficult territory to navigate, which they've always known. So I don't think we will have that kind of play out of rules as we're seeing in China. China has somehow pressed several self-destruct buttons on many fronts, and we'll see that play out to the advantage of India over the next 5-10 years.
Right. Okay. So one last question before we go, Haresh. So what was your winning bet this year, and what do you hope will be your winning bet in the next year? The one.
Okay. So I had invested in a startup that called InVideo, which is essentially helps automate video making. I believe that there is a bunch of opportunities in the place where the machine can help the human perform better. So one of the spaces is video making. So that's the one I had invested in. That's done fantastically well, and is now a global, is being used globally in multiple languages just over the last 1 year. So that's doing well.
And a bet for the year ahead? I mean, you may, even if you don't name the company, the space.
A fintech company.
Okay.
That is supplying the pipes to banks.
Okay. Great. So you are putting your money where your mouth is. Okay. Haresh Chawla, it's been a pleasure talking to you. Thank you very much for speaking to me.
Thanks, Govind.